Good evening, everyone. And myself, Shweta Jain, Secretary WRC. Welcome all of you on third day of this auditing standard workshop. And today we have with us Aleem Lilani ji, Manoj Daima ji, who are going to deliver on the subject. And Piyush Chandak, my council colleague and treasurer of WIRC. Also Nishit Shetty, coordinator for today's session. So, friends, generally, we were just interacting, Aleem ji and me, that generally when it comes to the auditing and accounting standard and ethics, people take it generally as a last choice to read. But the friends, really now days are gone and time has come to take it as a forefront. And we have to see and we have to vigilant to take care about the compliances. And I'm sure and I'm very happy to see you all in attending in a large number of this workshop. And I'm sure with expert and eminent faculties like Aleem ji and Manoj ji, your learning experience will be great. So without taking much time, I just will touch upon some few activities at WIRC. This year, a lot of new initiative has been taken because our chairman had a vision, and this year with his vision we have designed our theme as a lead, which is a lead towards excellence, achievement and development, and we have set out for ourselves some goals. So first we tried to conduct a lot of technology oriented program, because we all know that how technology has evolved, and we all agree that technology is way forward and we have to upgrade ourselves if we really want to survive in next. Drive series, which was a 5 days in a month dedicated to this only. In this, we have completed artificial intelligence, blockchain, Python, Tableau, and something kind of this program. And 2 courses on data analytics is specifically designed for the members and students, where Power BI and Power Query hands-on training will be provided to all the members and students. Also, Python and Tableau and MySQL queries. So if you all want to take a benefit, all the informations are available on our WRC website. You all can take the benefit. Then second initiative this year, we have done a lot of refresher courses. Just to keep this in mind, that how we can increase the efficiency in our chartered accountants work. So a lot of tools also we have provided. All tools are available on WRC website under professional tools tab. So you can download it freely and you can use it while performing your duty, whether it be audit or consultancy. Some industry specific webinars and seminars has also organized to fill the gap between the members in industry and members in practice. So like real estate specific programs, how GST is impacting, or what is the impact of GST on real estate industry. So sectorial series we have organized, then pharma related, health related industries. So this kind of program also we tried to provide to our members. And one initiative I definitely would like to quote here is, most of the time we experience that members face some difficulties while filling the form on SSP portal, or some even students also. So this year we thought that why not we directly interact to the members. So Thursday, every Thursday, second Thursday on the month, so we have started a live session where our members and students can talk us directly. So you just need to send your query, your grievances, your problem 1 day in advance to us on our email ID wrc@ici.in. And on that day, you will be given a link, And with this link, you can join us, and myself and chairman will be there to talk to you, and members and students related, our officers will also be there to resolve your queries. So if you have any queries, any complaint, any grievances, please write us, reach out to us. So we are working hard towards achieve our goal, and we of course need your support in achieving our goals. But at the same time, we all are there to support you. So if anything is there, please reach out to us, call us. With this, I will not take your much time, and I don't want to come in between you and faculty. So I will request our treasurer, CA Piyush Chandak, to please introduce our today's faculty and start the session.
Thank you, Sweta madam. Dear friends, I am CA Piyush Chandak from Nasik, currently the treasurer WIRC. And like Sweta madam was discussing about the need of the seminar and the general attendance on this kind of seminars, I would just like to highlight a news which I came across recently. A chartered accountant, statutory auditor of Amrapali group of companies, well-known housing scam. Recently, the disciplinary committee of ICAI has removed the name of this statutory auditor permanently from the register of members. And the remark actually, which I would like to highlight here is, I will just read out the quote that what our disciplinary committee has stated in the judgment, that he had failed to disclose the material facts, and he also failed to report the material misstatement that existed in the financial statements. Further, the committee is saying, in the absence of working papers, mind you people, in the absence of working papers, it is also evident that the respondent had failed to obtain the sufficient audit evidence to express the opinion on financial statements. Now here, the importance lies in these kinds of seminars. And I'm thankful to see Aleem Lilani to take up this task. And I'm happy to introduce him before you. See Aleem Lilani. By education, he is a chartered accountant, master in commerce, and bachelor of law from Mumbai University. Aleem has 16 years of varied experience in providing audit and assurance services to the clients and handling quality assurance and risk management for the audit and assurance practices. His expertise and experiences includes audit and assurance services to the manufacturing sector, services sector, oil and gas sector, and financial sector. He also has done quality assurance in the audit and assurance practice through advising on qualifications in the audit reports, certificates, financial statements, reviews, conducting cold reviews, drafting engagement letters, and so on. He has also guided the audit teams on implementation and interpretation of Indian GAAP, Indian AS, IFRS, Companies Act, and SEBI regulations, etc. Training and development is one of his choice, imparting various trainings pan-India on implementation of audit tools, auditing standards, IGAP, Ind AS, Companies Act, SEBI regulations, and GMCS course, etc. So I think we have got a very expert faculty for this seminar, and I welcome before you C. Aleem Lilani. Over to you, Aleem sir.
Thank you very much, sir, for that introduction. But I am not an expert. I am also learning, and audit is a profession that keeps us learning. And I think more recently, they are wanting us to learn more and more and more. So the auditing profession that we have started off when we passed out 10 years ago is totally different now.
So kind of you. Thank you very much.
Yes. And I remember the auditing module in the CA final course used to be this much, and it was considered to be the small subject, right? And I think today, if we publish that, if we look at today's auditing stand, if we publish everything that is now in auditing, I think it will become the largest book like the Income Tax Act book.
And one of the most important book now, sir.
Most important book, yes. Because the world is becoming more complex now, and that's the reason audit is becoming very, very important, and everyone is looking at the auditor for everything now. So it is time for us only to upgrade. We have no choice. So all said that, I'd just like to say thank you very much for inviting me to this session. It is my pleasure to be here and to speak to all of you and the many, many participants who are here on what on this quality standard, which was always there, but it was never given that kind of importance. And today we are seeing that quality is being spoken across the globe, and they are wanting more and more quality, and now they want us to demonstrate the quality. Definitely we have quality. We are all chartered accountants. We have done the best education the world had to provide. This is my personal feeling. But today time has come for us to demonstrate quality, and that is the major challenge of the quality standards SQC1 and SA220. So my objective today is to give some information on these standards. How can we practically apply these standards in a smooth, efficient way, so that alongside the pressure to do audits, which we have in the season, the tremendous pressure, we ensure that these quality matters are also taken care of and not missed. While that's an introduction to what we're going to discuss, considering the time I have, it may be a little quick, but I'll try to be more practical, if that's okay. The theoretical understanding of SQC1 is very large. There is a lot written in the standard. It's there in the presentation, but I will try to be more on the practical aspect, because when I was approached for the seminar, they said, please try to make it more practical. Everyone knows what's written, but how do we do it? So it's going to be interesting, and I'm happy to share with you some of the practical things that I have learned in my career, and how the standard and quality has to be maintained in every firm. Great. So let's begin. I will just share my screen. So I have an error saying host disabled participant screen sharing. So can you just enable that? Whoever's handling the technical part.
Mr. Ji.
हाँ सर.
हाँ मिश्रा जी, इनको स्क्रीन शेयरिंग का राइट दीजिए प्लीज.
दिया है सर, वापस देता हूँ. सर अभी देखें.
Aleem sir, can you try once please?
Yeah. Now it's working.
Okay, great. Yes, sir, it is working.
Okay. Can someone just confirm if this is visible in the presentation mode?
Yes, sir, it is visible.
Okay, great. Thank you. So let's start off. SQC1, these are the name of SQC1, basically what it stands for. Towards the end, I will tell you the differences between SQC1 and SA220, which is the auditing standard. So SQC1 is the system of quality control for the firm, and SA220 is for quality control in the audit engagement. Okay, that's the basic and the main difference between SQC1 and SA220. So I will talk about the firm level, and in the end we will reconcile and just understand how it applies to every audit. Okay, so as you can see, the name says quality control for firm that performs audit and reviews of historical financial information and other assurance and related service engagements. So SQC1 has to be adopted by every firm that does audit, it does reviews, and any other standard of auditing which we are using to give an assurance service. We need to say we are compliant with SQC1. Why this is important? Because in every review today, whether it is the peer review or a review by the quality review board, and of course a review by the NFRA, they are going to first assess your firm's compliance with SQC1. It is a fundamental part of their review, and they are going to do it. So let's understand how do we get into the firm level. How I will flow this is that we will talk about the purpose, the elements of the quality system of quality control, which are leadership responsibilities for quality within the firm, ethical requirements, acceptance and continuance of client relationship, human resources, assignment of the engagement teams is one part we can discuss. The engagement performance itself is also an element, and the monitoring activity is basically how do we monitor the quality system. So Let me take you into audit. So when we talk about control, if you know that in audit, we also assess the client's control. So when we look at the control, we look at the design, we look at whether it is implemented, and finally, we do testing of the operating effectiveness. I think everyone will ring a bell of what I'm saying. SQC1 is exactly the same. It is a control system. So we will define the controls. You need to ensure that the design of the control is proper. It is implemented throughout the year. And finally, you need to do testing whether the control is functioning. If it is not functioning, what can be the remediation things that you need to do, remediation measures they are called. And then at every year, you should assess, did my system of quality control function? And then make the corrections and then reset, then start the next year. So the intention of SQC1 is this only, that you set your quality policies, procedures, controls, you make sure they have operate throughout the year. At the end of the year, you assess, you see the mistakes, you see the good things, you amend, you improve, start again. This is the intention of SQC1, and I think all firms can be open to this because we all have something to learn. We all have ways, we all have to improve our quality process every year. So it is not a one-time thing, it is a continuous thing. This is the purpose of quality control, which I have already explained in many ways. Very, very essential for us to basically, maintain a certain system of quality. When the quality system of the firm is proper, then only the audit will be effective and proper. Okay, so that is the reason it is very important that the control in the firm should be proper. Then the audit will be perfect. It will be, without ambiguity, clear, clean, that's the main purpose. Which are the elements of the system of quality control? So we're talking about leadership, that is the tone at the top, that should flow down. Ethical requirements have to be taken care of. Then acceptance of a client. Before you accept the client, you must do background checks about the client. Take a client with you who are willing and to achieve high quality. So we need to check before we take the client, or after taking the client, taking the additional engagement also. That's one part. Then we have the engagement performance is the major chunk, which is the audit part, okay, where we have to keep control. And human resources. So you need to have a human resource system for people, quality, audit. And there's also one stage, last is the monitoring stage. Okay. So I have a lot to take you more practical understanding of this. It's the have a system where we make a policy and procedure first. It should be that at this part not procedure prepared. It has to be communicated to everybody, and this when we read through. So let the first thing talks about is this leadership responsibility at the top. So we're talking at the leadership on the top. Who are the leadership? Basically, it is the CEO or the managing partner of the firm or the main senior partner of the firm. The first thing we need to know is, and we need to demonstrate that so we have designed pro quality. Okay. When you understand when we say the culture is pro quality, you'll understand that what we're trying to say is that we need to show that managing partner wants to ensure quality. So he should communicate a quality message very good email has talk about doing better audits. If he has that intention, then only he will invest in quality, support tools like softwares, dedicated quality teams, subscription to RBI. He will allow consultation on important matters because we need to do good work. So the leadership has to set the culture. So we should first have demonstrating the leadership of take the responsibility for the quality of the firm, because someone has to take the responsibility. The top person takes the responsibility. He pushes it down. He communicates with everybody.
Hello, Aleem sir. Aleem sir.
Yes, sir.
सर वॉइस ब्रेक हो रहा है आपका अलीम सर. हाँ ब्रेक हो रहा है सर.
Okay, sure. Am I audible now? I think perhaps there was a dip.
ब्रेक हो रहा है सर, थोड़ा फिर भी ब्रेक हो रहा है.
Okay, so fine. I'll try to turn off my camera for a minute and we'll see how. Okay.
तो स्क्रीन शेयर भी रुक गया है, स्क्रीन शेयर भी नहीं है.
Okay, let's try again once more. Otherwise, I will switch the internet connection. Is my screen visible?
Sir,
Yes, visible. Not visible now. It was shared a few minutes before, few seconds before, but now it is not shared.
Yeah, okay. Hold on. Okay, are we back?
Yeah, now proper.
So I'll continue. So when we talk about the culture of the firm, let's set it by making policies. Let's set it by making some communications from the top management, to senior partners, to all the partners, all the staff, all right to the article training. You can have a system of giving rewards for quality work. Okay, so every month or quarter or annually, you can have a reward program where you reward good performing employees, and especially people who have done good audit. They have used special professional skepticism. Let's have those things in the firm. So that demonstrates the firm culture towards quality. If you're getting what I'm saying. So this is how we should do it. And top leadership should support trainings, subscriptions for resources like Company Act. There are many online softwares, there are many online subscriptions which can help improve audit, do better audit, international gap subscription, IFRS. So let these things come into the firm, and when you demonstrate this, it shows that the culture of the firm is pro quality. So this is one thing everyone finds difficult to demonstrate in SQC1. So if you follow some of the examples I just said, it should be a good demonstration of leadership responsibility of taking quality and making sure it is followed. Again, in the process also, quality should be a factor. So person who is not performing up to quality, he should be discouraged or he should be rated low, or if he has violated a policy or procedure, then there can be disciplinary action also against him. So these are the things if you need to take care from management point of view. These are sort of same on what I spoke about. This is if you keep these procedures and policies in place and document it and have regular communication across the firm, it is good enough leadership involvement. Let's talk about ethical requirements. Now, this is something without a say is considered to be the most important part before you start the audit and also during the audit. Every regulator is wanting to look at independence. They want to take up that as the first item in their reviews. And there are no, what do you say? We cannot make any excuses for violation of ethical requirements. It's very difficult to push back any regulator who asks you why you did not comply with ethical requirements. So how do we do this? So first, you need to make a policy that talks about complying with ethics, complying with independence, and it should be based on the Code of Ethics of ICAI. Recently, there have been revisions in Code of Ethics. NOCLAR is now, which requires every person to look at compliance with law regulations. So all these things, you must have a policy about it, and it should be communicated to everyone. After, you need to also involve the leadership to push for compliance with ethical policies. A circulation by them enforcing it is good enough. You must have a training every year or at least once in a year for your entire staff on independence, because this is one point everyone misses in the busyness of doing audit. So my personal suggestion would be that, and many firms have this as mandatory training every year. So we educate them on audit policy, how to comply with it because of with the various forms available or formats available. And we practically let them ask questions on independence, so they will clear their doubt, because they have lots of doubts about independence. I am doing this engagement, can I take up the other engagement, who should I speak to, when should I speak, kind of things. And definitely, very important, you must have a clause for disciplinary action on non-compliance, because this is a mandatory compliance. No way we can have non-compliance here. Like, for example, I can give an example. Holding shares for company is a serious violation. SEBI is also out to, catch such instances, and they take stern action. They don't take any excuses from the firm. So this is a very, very important clause. You have to have communication, shares of those companies, not invest in those or have loans with those companies or banks. So let's speak about how do we achieve this. So let's take it fresh in versus independent. So you can also have a policy which says that if you get stuck, you can also approach an external expert for view on independence, how to maintain. One thing is very important is that you must have where you freely. So when a partner takes, let's take a very simple example. A partner takes on an audit. He wants to take on a statutory audit. He needs to communicate with all the partners that, look, XYZ company, I am taking up the audit. Do we have any independence issue? Or if you are servicing any of those clients, if any of the partner or is servicing this client, please let me know. So we must have a system where we can email, or a computer or a software that sends out a notification to all the partners that, look, we are taking on XYZ client. Please escalate your ticket or form if you. That's one way. That query should come back to the partner. The partner should speak with that team and see whether any threat to independence is there. And then you can decide, either he will decide not to take the engagement, or he may decide that the other partner let go of their engagement and then we take up this audit engagement. Or, we may together decide that, okay, let's keep the team separate. Let's keep the safeguards mentioned in the Code of Ethics, and we can continue with the engagement. Then those safeguards need to be documented. It should be in the audit file. So tomorrow, if any inspection happens, we can demonstrate that, look, there was a threat to independence, we have mitigated it, and we have gone forward. But for all this to happen, it's very important that it should be documented in the firm and on the file. That is the place where we sometimes lack. So this is very important. Okay. You can have a database stored somewhere which lets the partner know all the clients that we are handling. So if he takes up an audit, he can go and check the entire list. Okay, are we servicing this client? And if yes, if the database has the name of the partner, very good. He can immediately contact the partner and say, look, I want to do this work. What kind of work you are doing with the client? He can communicate immediately and, mitigate the threat. So basically what I'm saying is that we must have a policy, one. Secondly, we must have a system where we can communicate with each other on independence. And third, we must document how we mitigated the threat of independence. In a very simplified manner, I'm telling you what we need to achieve. We can do this in firms in different ways. We can make it is as simple as this, but we just need to make the system to work to make this happen. And we need to demonstrate this in every inspection that takes place. So let's just going forward that we should have a system where the breach gets notified, and everyone who is subject to independence will notify the firm of the breach. They become aware of it, and the firm should communicate the breach to the engagement partner who needs to address the breach, and all the other personnel who need to take any action in respect thereof. For example, let's take a very simple example. You have a team of 5 people. In that, there is one, when you do the audit, he was independent, but later during the year, let's say his father, became the CFO of that company. In such a case, you have a person who is a relative who is taking up a material position, financial position in that company. So that person, that team member, his independence is compromised. Okay, because he may not be true or very clear with the work that he does because the father is the interested party there. So you need to maybe take off that person from this audit engagement. He should not be a part of this audit engagement. So these are the kind of mitigation that you should have a system it should be escalated. So either he notifies the firm that please note that my father has taken up a job in this company as a CFO. It is a financial position. So let me know what I should do. He must communicate with one person. So I'll tell you a very easy way to set this part up. So what you should do is at the beginning of the year, you must take an annual declaration from everyone in the firm on the engagements that we have on your list of clients, whether you are independent or not. So let everyone in the beginning of the year declare, or any time of the year we can declare their independence from that client. And if they mention that, okay, we have stocks, let's say he's owning stocks of a couple of clients, he can inform the firm and firm can take action or ensure that that person doesn't work on those clients. So action can be 2 ways. Either we tell that person that, look, you have to do the audit of that entity which you're holding the equity shares. We plan to put you on the audit, so please dispose the equity shares. Or definitely if they are partners and partners of the firm, they definitely cannot hold any shares of the company, of any company that we audit. So they all need to dispose their shares, or they need to transfer their loans if they have a loan with those, they have taken loans from those companies, or they cannot take further loans. For banks, Code of Ethics has specific mention that which and the normal course are fine, but the additional loans cannot be taken of amount beyond particular amounts. So you need to have a system to tell them, okay, transfer your loan to another company, another bank, or you can ensure that that person, if he is a team member, he does not work on that audit. So this is the way this system should function. So going forward on what I was saying, that you should have an action system, disciplinary system, that people are discouraged from doing this kind of practices. Like I said, annually we can have written confirmation from all the relevant personnel. One of the ethics also talks about a familiarity threat. So in every 7 years, you must rotate that partner, the quality control reviewer, the EQCR is called, or the senior personnel working on the audit, like the team leader, okay, or the team audit manager. These senior people, partner, manager, team leader, EQR reviewer, they should not be on an audit engagement for more than 7 years. So you must have a system where you rotate the partner and the senior people. So just to summarize what we discussed on independence, I'll give you a few points to do. One, you must have a policy in place which should be based on the code of ethics, and you must update that policy every year as the code of ethics is updated many times. That's one. Second, take an annual confirmation from every employee of your firm on independence. And one very good suggestion is that before every audit engagement starts, let every team member give his declaration of independence, and let him sign a statement saying that if his independence is compromised, he will inform the firm. Or you can have someone called as an ethics partner or an independence partner, who can be the single person in the firm whom anyone has a problem in independence can approach and get their query solved and risk mitigated. Last but not the least, very, very important, that whatever you are doing on independence to mitigate the threat, that has to be documented by the firm, or it may be documented in the audit file, but it has to be documented, because in the inspection, they will ask, please demonstrate how you checked independence for the firm. So we have to be ready on that front. I think a lot said about independence. I just wanted to stress it's very, very important. Many large firms are working and investing good substantial amount of time and money to ensure that independence is not compromised, because the larger the firm, the more difficult it is to know whether someone doing an audit in Bangalore and someone would have not taken up the audit in another branch, or or a conflict of service in another branch, say in Delhi or Mumbai. And if it is international firm, even more, because in audit, as you know, you cannot take the audit of the subsidiaries as well. So it should not be that we are doing one audit here in India of the main company, and in the foreign company, you have a small subsidiary to whom maybe your branch is providing internal audit service. So statutory audit and internal audit do not go together. You cannot do it. Companies Act 144 has listed services which are disallowed, are not allowed at all. So that has to be part of your policy also, and there can be no excuse on this. Okay, one of the more interesting parts, my favorite, is the acceptance of clients and the terms of the engagement. So this is basically talking about doing due diligence before you take a client. Very, very important. Very, very important in today's world, because clients are now very complex. One, so I say this is a risk from 2 points of view. One, we need to see the client, whether his integrity is there or not to do business, with honest business, whether he has integrity to comply with auditors, to listen to auditors. You see the nature of his business. Is he violating too many laws? Is he in a very illegal businesses? We need to see the integrity of the management. So sometimes we all know that certain groups have a certain aggressive way of functioning or a conservative way of functioning. So this gives us an idea of the risk that we face, because if we take on audits that are aggressive, have aggressive accounting policies, or they have a aggressive way of functioning, it puts pressure on the auditor as well to meet that aggressive view of accounting standard interpretation, or to meet that deadline which the client is putting on us, which is unreasonable sometimes. So as a firm, we need to decide ourselves whether we want to take this client or not. So some of the very important points, very good points written here, I'd like to read them out to you so you get an idea. So we must identify the reputation of the owners, the key management personnel, related parties, and the TCWG. So do some background check on them. See the nature of the client's operation. Example, if he's in a gambling business company, and what are the business practices involved. I'm not saying we cannot take the audit, but we should be aware of the business practice. One very important reason to find the nature of the business is because we need to assess whether we have a technical know-how to audit such a client. Do we know how to do a bank audit? Then only we should take up a bank audit. Do we know how to audit an oil industry? Then only we should take up an oil industry audit. So that's the reason. You must document in this client acceptance before accepting, saying that, yes, I have the knowledge, I have the competence, I have the sufficient team to do the audit. Information regarding the attitude of owners towards accounting standards, whether they are aggressively concerned with maintaining fee at a low level, because this will ultimately frustrate the auditor and he will not be able to do a very good job and give quality service. Any limitation on the scope of work. If client says from the beginning, look, we will not be sharing our inventory details with you, you must notify, you must highlight that point and say that no, we should not take this audit because client is not willing to share his inventory details with us, or many times client is not willing to allow you to visit some of his offices also. So I have seen this practically. So we should catch this as a liberation of scope and decide not to take the engagement. The other part now talks about illegal activities, so money laundering matters, criminal activities, criminal backgrounds. If they are subject to a lot of criminal backgrounds, then that audit becomes very, very complex and very difficult. So let's take care. Before we take an engagement, we should take care. Reasons why the firm is being appointed and why the previous auditor has been taken out. This is a very, very interesting point, and I've seen it so often. Very often clients come and say, look, we are not happy with the previous auditor, okay, and we would like to change the auditor. So you need to understand why he is not happy, because that auditor is qualifying a matter and you don't want the qualification. So this is something very, very important to see. Why did he remove the previous auditor? Because definitely you are going to face the same situation the previous auditor faced. And if it is an ethical issue or if it is a quality issue, you will be in big trouble if a client tomorrow puts the pressure that, no, look, you don't qualify my report, or look, when I gave you the audit, you should not qualify the report. So this is a very, very touchy point. We must be clear why the company wants to change the auditor. It's very, very important. So how do we establish all this? So let's make a policy first. Let's make the procedures. Before you take an engagement, then let's say there should be a checklist. In the checklist, let every partner and team fill up the details. The details will have a lot of questions regarding background check. You can review the last year's annual report or the balance sheet. You can see whether there are qualifications, whether client is violating any laws, a lot of penalties. You can look out for these kind of instances. Also address whether you have competence to do that audit. Like I said, this is today becoming a very important point, because business is becoming very complex. Today we have businesses, because of the digital age, people sitting in one office in any small town is doing business across the globe in multiple industries. Okay, and it's growing very aggressively as well. So we must assess whether, so it may look that this office is here, okay, he's in a small town, but actually he's doing multiple complex businesses across the globe. So we should check all the activity he's doing and then decide whether we have the knowledge of blockchain, whether we have the knowledge of the various derivatives that he's working on, or various trading activity like cryptocurrency is one. If that person is a cryptocurrency trader or investor, these are very difficult audits because of the intangible nature of cryptos and the variability of its pricing. So let's take a step back, check whether we can do the audit. One. Second, what risk we are exposed to in doing the audit, because it is complex. So some of the industries are very regulated. We may not, as a firm, you may not want to take up too much regulated audits, because then it involves a lot of communication with the regulator, and if your firm is not equipped to do that, we should not take it up. And third is, definitely we all face the crunch as the team. So please see if you have the team to do the audit. Taking up a bank audit of pan-India level and not having a team to do is a disaster. So that's something very important. And client acceptance should also cover ethical requirements. The last point I want to emphasize here is that this doesn't stop at taking the client. If these problems crop up during the audit, at that time elsewhere also you can decide to exit or mitigate that risk that has come up. So that's basically what I had to say about acceptance. Here we again see it just elaborated again in detail how we need to check availability of experts if we need them, industry specific experts or personnel with experience. I'll move forward. So this is, you can read up later on the presentation. This is again talking about what do you do if you want to withdraw from the engagement, So you go and so supposing you decide that I cannot do this engagement, I cannot continue with the engagement, you go talk to the TCWG. If you're going to withdraw from the engagement, then you need to document the reasons, explain to them why you're withdrawing from not only client, maybe you decide to keep the client, but you want to get out of some of the services with the client. It can even be your past experience that, okay, last year this was a very difficult engagement. We don't have the time and resources to give you for doing this specific audit or special audit. It's fine, it's allowed, but we need to document. Important thing we need to see is whether we can professionally legally withdraw from the engagement. So that's something, of course, we need to consider before withdrawing. And we have to document our reasons, the issue, who did we consult, the conclusion, maybe you discussed with the senior people in the firm. All that has to be on your records. Okay, I think we did a lot of time on client acceptance. Let's talk about a rather simpler part of the elements of SQC1, which is the human resource function. Obviously, it is nothing great to understand, but the human resource gives you good people. If you have good people, you have good quality. It's very simple as that. So how do we ensure that we are getting the best people to do our audit? So we must ensure that there is a policy in place that when we do recruitment, we check the capability of that person, the competence of that person. So you can have a checklist, talking about certain questions you must ask in interview, assess his capability for that engagement, assess his capability and experience to come and work for the firm, and what degrees he has, whether the degrees that he has is suited for your purpose. Those kind of things must be evaluated, and there must be a system to evaluate it. It should not be an ad hoc recruitment. Okay, come, join the firm. No, this is something happened here ages ago. Today, we need a very documented process to bring any person to the firm. So that's one part. Later, HR role doesn't stop there, but it goes on further. We need to do performance evaluation every year. We need to assess his career development, whether he should be promoted, not promoted. Did you consider his performance, especially from a quality point of view, on promotion? So if there is a person doing, yes, a lot of audits, he's bringing in a lot of fees, but he is not complying with many of the quality processes that you have set up. He is not consulting on engagements. He is not following the firm's standard formats or the standard calls that the firm has taken. He seems to disagree with the firm on every matter and wants to follow his own way with respect to the audit, or his team, or the team is not happy with such a person. So such a person should not be encouraged in the firm. We need to have good leaders. Only then we can have a good audit. So let's make sure that the KPI, the key performance areas or key resource, KRAs are properly defined. See here that his vision merges with the firm's vision also before taking him on board. Third part, HR has a slight function to play here, but increasing the professional experience and education. So we have ICI doing all these courses like the one I'm taking right now, but firm should encourage their people to attend these trainings. That's one way. Or firm can have their own trainings on various matters which need to be improved. For example, now we have ISA 315 is, SA 315 is being revised. Risk identification is more important today. So we should talk about that. We should have a training on that. When we had the COVID scenario, we had a lot of difficulties. So it would be nice if the firm established a training that how do you now work in the COVID scenario? How do you take care of the audit issues like inventory verification, valuation, external confirmation. So have a system where you keep growing your team to do better. So this is the HR function, but large part HR will set the process in place. Audit team needs to take it ahead. So as I should not don't need to say this, but this all need to be documented in a policy. We should be able to demonstrate that we have done these things. That's how you will show compliance on SQC1. Okay, so again, firms evaluation, compensation, performance evaluation, compensation, and promotion procedure give due recognition and reward for development and maintenance of competence and commitment of ethical principles. So this is actually more the reverse way. If you are not following independence and ethics, they should be punished. There should be some penalty, some system of discouraging people. So how do we achieve all this? Make the personnel aware of its expectations regarding performance and ethical principles. Provide personnel with evaluation of and counseling on the performance, the progress, and the career development. So some firms I have heard have a engagement by engagement performance evaluation for the team, for that team member, which is very, very good. A little difficult to achieve, but very, very good. So the person gets feedback after every engagement so he can develop. Of course, you have to, next talks about having very clear definition of how he should grow, what are his KRA to grow to the next level, which should be clearly defined. Okay. The next we're talking about is, I can't see the topic. One minute. Yeah. So we talked about in human resources, very easy understanding. Just an extension of that is how do you assign the team, basically. So this is also very, very important from quality because you need to have the right people doing the right job. So it is the responsibility of the key engagement partner to identify, the personnel that he needs on the audit, who have the capability, competence to do the work required. So he may require one manager or two manager or more junior staff. That all it's his decision. So we should have a process to monitor the workload of every partner, because one partner cannot do hundreds of audits. He can do 10, 15, 20. There is a certain limit. It's impossible to prove tomorrow to the world that my partner did 100 audits. I have learned that this is now being looked at very closely. So many firms abroad have a policy that partner should not handle more than 10 listed clients, let's say, or 5 listed clients, because all have the signature on the year end, that is before May. So it's practically not possible for one partner to audit, let's say 10 or more than 10 listed companies and sign them off all within that 1 month. So we need to have a policy talking about the workload management, that how much can the partner take. Then we talked about assigning the proper staff to him, which is based on the experience, the training, where he has worked previously, his knowledge of the professional standards, the legal requirements, the technical knowledge, ability to apply professional judgment, very, very important in today's world. And that person should also understand SQC1. Today, that is becoming also a requirement. If I can add here, today people that we need should be very good with IT, information technology. So I have even heard firms recruiting CAs, but during the recruitment, they are asking, do you understand artificial intelligence? Do you understand big data, distributed ledger? So it's actually happening where we thought as CAs we would get employed anywhere, and we do. But the questions today are being asked is, do we understand the new technology of the world? And the better the understanding of the technology, the better quality work. There's no doubt about that. So that's very essential nowadays, and I see it coming up very often. So that's on the engagement team. I'm sure you all are getting, I'll take a minute here to take a break. So I'm sure you all are understanding that whatever I've been talking about, let's break it very simple. You need a policy. You need a policy, then you can define some procedures, tell everyone to follow those procedures, have a system to communicate that procedure to everyone, And tomorrow you should be able to test whether that procedure has been followed or not. So I'll talk about monitoring in the end, but it talks about basically every year doing a sample of your firm, take a sample, check. So take a sample for independence matters, check whether that was followed. Take a sample for HR matters, check whether they followed all these things, whether training was done, whether right people are being appointed, do the appointment process, formally state the evaluation of the candidate, the review, the points by the person who took the interview that yes, this candidate is proper, he has answered the questions properly, and then he signs off. So these all just, we are doing it, we just need to document it now. That's all SQC1 is saying. So the last part is the documentation. Everything need to be documented. That's it. And now, the most important part where I think everyone is fairly comfortable is the engagement performance, because the 90% of the focus of a firm's quality is the audit. We want to do the audit properly. We push ourselves every day and night to do the best audit. No matter how late the client gives us the information, we push ourselves, we get the work done, we try to ensure all the disclosures. We have checklist of Schedule 3, we have checklist for Ind AS. ICAI has also released these checklists, which can be used by all. We have the books, we have the knowledge, and we are applying it in the audit. But let's look at how we can demonstrate it and certain aspects which SQC1 is saying to further the quality. So let's look at that. And this is very important because this is the crux of quality. All the previous components which were discussed are meant to ensure that this component is proper, right? So the client is proper, the team is proper, the work is proper. So we are now here at the main part of quality. So I just take a 20-second break to give my throat a little rest, and then we start off this very important part on how to look at engagement performance. All right. So let's start off engagement performance as the element of SQC1. The first part talks about doing the performance, proper supervision and review by the senior. Simple to understand. We'll get into it in some time. Consultation. Please consult on a complex matter or a difference of opinion matter, which is the next point. What happens if there is a difference of opinion? How do we resolve that? Third is the quality control, quality reviewer. It's called the engagement quality review. He is the person who, along with the partner, reviews the file, reviews the important matters, and signs off. This is requirement of SQC1. On certain engagements that meet the criteria, you must have a quality reviewer on the file. Very interesting and very helpful to maintain quality. So let's go forward and see what we're looking at. So SQC1 requires the firm to establish policies and procedures to ensure that the audit, the engagement are performed in accordance with the professional standards, the regulatory and legal requirements, and the firm or the partner issues the proper report. So appropriate report, when I say, it's like it should be qualified, it should be qualified, it has to be a clean report, it should be a clean report. This is the intention of SQC1. How do we ensure this? So we can have various, the audit manual can be there of the firm, which guides every aspect of the audit. So the manual is something every staff member can go to and refer how to do the audit of that particular area. So maybe planning, it may be executing inventory checking or impairment or whichever area. The manual has the complete documentation of how to perform the audit. So we should have a manual, which can be written or electronic. You can have tools to support compliance with quality. So when I talk about tools, very simple understanding. If you have a work paper, someone can sign off as prepared. The reviewer signs off as reviewed. Now, if that software enables a date stamp and a time stamp, it's very good. It shows that the preparer did his job. This is the person. The reviewer did his job. Reviewed it. This is the person. Today, tools are getting very advanced. They allow reviewer to raise query on the file, on that document. So a ticket gets raised, or that the partner has or a manager has a certain query, and the junior has to resolve that query, attach the document and give it to him. So it keeps a trail of how the audit is being reviewed properly. We can have all standardized documentation, because if you have many people in the firm, you don't want them to follow different format. So you can make a format, a standardized document that has like a checklist, give it to the team, let all teams follow that checklist, and let that be a policy of the firm or a procedure of the firm that everyone should follow this. We can circulate a lot of guidances. Multiple guidances can be circulated, especially in audit, because so much is changing. Guiding the team, like I said, COVID time, a lot of guidances rolled out. ICI, I'll tell you how it must have happened. ICI rolled out guidance on COVID times. Every firm must have also rolled out the guidance to their people. They may have forwarded ICI's guidance to everyone, or they may have also made their own internal notes and told and guided their teams. This is a very, very good example of pushing quality, standing for the best quality audit. So in a nutshell, let's see what policy should cover, how the teams are briefed on understanding of the work objectives, process for complying with account applicable standards, process for engagement supervision, training and coaching, methods of reviewing the work performed and significant judgments made, like I just said, documentation of the work performed, how to document. So we have checklist formats, and the policy and procedures updated and kept current. That is also very, very important, because our standards are changing every day. Now, in engagement performance, again, as we discussed, most important is supervision. So we must have a supervision policy that, the progress of the engagement is tracked, confidence of the team is assessed, significant issues are identified, and they are consulted if required. So we should have a policy around consultation as well. We'll discuss that in the next slide. Review responsibility, we can have a policy stock that, experienced members should be reviewing the work, not inexperienced person. So that's one we should have. The more experienced engagement team member should review the work performed by the less experienced member. It's very logical. The challenge is in demonstrating that the review has been done properly, and the person is more experienced. So that sometimes is a challenge, but I think firm records can demonstrate it. How do you demonstrate the work paper sign off that I told you? You can have him sign off the work paper. In hard, it would be a physical signature. In soft, it would be a sign off digitally through the software. So this is very, very important, because everyone today asks that how can preparer and reviewer, because preparing a preparer and reviewer is a very fundamental part of audit, and SQC1 also is pushing that there must be evidence to show one person did the work, second person reviewed the work. While we do all the work, we can't demonstrate that. That is the major challenge. So let's have a system of sign off, a date and time and sign off, either physical or soft, no problem. But we should have this in every file. Next, what I can speak about is the consultation. Very important quality process is the consultation process. Now, what does this mean? So you have a policy that says that if there's a difficult matter, you consult. So basically, you can have a format, the team can fill up the format, send it to the very experienced person of the firm who is designated as the, the quality contact or the reviewer of for consultation. So it may be a current engagement partner, or it could be a separate quality team. Some firms are doing that they have a quality team that will look at this. So there's a difficult qualification. So we consult or Ind AS matter, or it can be auditing or accounting. So you need to consult, get their reviews, have discussion with them if required, understand, then communicate to your client, and then close that matter by a proper disclosure or qualification or whatever. Now, most obvious consultation means you need to have a system. You need to have a policy first that allows this one. Second, you need a system where person can communicate the consultation. It gets reviewed, it comes back to the team, and it is documented. So these matters should be covered in the policy. Sometimes consultation can be external also. So if firm doesn't have the resources to understand that matter, you can consult outside, which can be legal experts or audit experts. That's about largely what I have seen. Largely firms have a system where they designated one person who can be consulted, one or a team. He's a very, very experienced person. He should be experienced. Okay. And that person can be consulted on a matter, and what he's saying are communicated to team, and that is documented in the audit file also. Because SQC1 is saying you consult, then you have to document that also. And it is very well allowed and permitted. So this is all talking about a consultation process. The last point, of course, talks about, which I don't need to say, it has to be sufficiently detailed. It should enable the person to understand what is the issue, what was the basis on which the conclusion was made, and what is the conclusion in that consultation. This should all be very, very clear. No ambiguity, no difficulty in understanding. It should be very, very clear. What basis was used to conclude, that has to be there on that. It cannot just be yes, do it, or no, don't do it. There has to be basis for this particular. All I can refer all the authoritative references, accounting standard, auditing standard, Companies Act should be, you should refer the clause of the Companies Act or standards and say that on the basis of this clause, this standard, this para, we conclude that this matter should be reported or disclosed or qualified in this fashion. Okay, so let's move forward. Consultation take place orally in all firms, but written it is not happening. So this is what we need to push. Now we'll talk about a concept of difference of opinion. So supposing there is a difference of opinion between the engagement partner and or the team and the person you consulted, okay, or there is a difference of opinion between engagement partner and the quality reviewer, EQR reviewer. So then there needs to be a policy how to resolve the difference of opinion. It's very rare, but you must have a policy how to resolve it. So that can be by bringing in another partner or bringing in another team of partners who will assess the matter and decide, because someone has to decide now. So it's like going to Supreme Court now, like, that way. That's also prescribed in SQC1. So quickly telling you about the EQCR process, as it call it. This is important to state because as per SQC1, listed clients are mandatory to have an EQR on the engagement quality reviewer, as we call it. This person is as competent as a partner, and he will review the file and support the decisions made by the partner. And he must concur with the partner. Only then can the partner sign the audit report. Okay, this is very, very important to understand. He cannot overrule the quality reviewer. Okay, if there's a difference between what engagement partner is saying and quality reviewer is saying, we can take it, as I discussed in the previous slide, difference of opinion. We take it to a higher authority for resolution. All this obviously will be documented in the file. But the importance of an EQR is that he is so important Without him concluding on the file, partner cannot sign off that file. Just want everyone to take note of that. That's how important his role is. And for him also to have the independence to do it, he must know that his voice matters. Otherwise, it just becomes another consultation. Okay, it just becomes another formality. So we don't want that view. So this kind of authority has been given to the EQR. Without his approval or concurrence, the engagement partner cannot sign off the file. Now let's look at what is the EQR process, how is it functioning, why does it function, and stuff like that. So very simple. EQC is a process designed to provide objective evaluation before the report is issued of the significant judgments and engagement team made and the conclusions reached in forming the opinion. It's quite self-understanding. Now he can be either inside the firm or he can be external person from another firm. Okay, both are allowed. In case your firm does not have other partners to review or other senior competent people to review that file, then you may consult with another firm or a partner outside the firm. Okay. So listed companies is mandatory. Other than that, SQC1 says set the criteria. As per criteria, you can choose the major audits and you can have an EQR review on the major audits. So you can set a criteria like maybe very risky business like cryptocurrencies or bank audits or public interest entities, basically, which are covered: bank, insurance, mutual fund. These are very complex audits and they have public interest involved. So very important to make sure that these audits are proper. So we can have an EQR on these engagements. So make a policy, define the criteria there, define who can be the EQR, what should be the capability, quality, competence of the EQR, have a firm's process in place that we can employ this EQR. We can take up, this is the process of, appointing an EQR. Have a system to say that what will EQR do? We can also give a guidance to the EQR, what you need to review in the file. He does not need to review every document. He can choose to, but he does not need to. He needs to just look at the significant judgment, the significant matters, the critical matters. I think on the next page, we have a list of what he should be looking at. Yeah, so like I said, he can look at unusual circumstances, risk, litigations, going concern issues, revenue recognition in an infrastructure company or a real estate company, claim accounting in an insurance company, or where there are judgments involved like warranty, environment liability. These are major judgments in audit. So these are the things he should be look at. Finally, he should look at the audit opinion, whether it is appropriate or not. And if you're giving a qualification, it's appropriate to give the qualification. These are the places where his view is to be taken. So rest we have all discussed. So the EQR, how should he be involved? So I guess these are the more procedural parts of how he should do the review. I will not spend too much time here. Move forward. So like I said, he has to look at all the important things. He should be satisfied before the report is issued. And whatever recommendations he makes, the engagement team should follow. Should, take it as a positive feedback, follow, comply, make him satisfied with the changes that you have done, the additional audit procedure that they have done, and then close the file. Take his sign off and then close the file, issue the report. So this is something about how do we decide who is the QR reviewer, what should be his qualification, and stuff like that. We can look at this later in the presentation. Again, talks about documentation of the EQR review. Okay, some points about how to document the file. Very important is something called as the archival. So every audit file has to close before 60 days. So from audit sign off to 60 days, you have the file can be open, but after 60 days, it cannot stay open. It should be signed off. When I say signed off means it should be closed. There should be no editing allowed in that file, whether it is hard copy or soft copy. So a lot of people have difficulty understanding this. So let me explain what is this. Okay. So standard says that when you issue the audit opinion, all evidence, all conclusion, all understanding should happen before you sign the audit report. It's very much common sense. So to avoid people issuing report and then getting evidence from the audit from the client, there is a policy that says, a very natural policy, I would say, that all your work of audit should finish before you sign off. So you are not allowed to. So it says that the file can be open for 60 days. Now this is said because it allows the firm to do a little bit cleanup. It's called a housekeeping period. So we do little cleanup of the file. So remove some of the tags or comments that are left out, or insert the scanned copies of the various documents we have got. Those kind of things can be done in this 60 days. But all evidence, discussion, conclusion should finish before or signing the audit report. After that, you cannot insert any evidence in the file. You cannot insert any conclusions or judgments or working paper in the file. You can only clean up the working paper a little, because by the time you close the audit, it is too much rush. So it's very much possible that certain files you need to attach something which is left out, or you need it's in hard copy, or you left some colors and some comments which need to be just cleaned up. Only that part can be done in the archival period. But no way should you insert any evidence in the file after audit sign off. Why I'm saying is this, because a reviewer that comes to the file, if he sees that evidence is put after signing the audit report, he will straight away conclude that your audit was ineffective, your audit was not proper, not of quality, and he will fail the file. So please take care that you finish all documentation before. Target should be to sign off archival the file on the same day, because actually all work should be finished on the same day. But because it takes some time, sometimes things are busy with other engagements, a time of 60 days has been given. Okay, so certain ways how you can later keep confidentiality knowledge. Once your file is signed off, only the audit team should be able to access the file for confidential reasons also. No changes can be made, unauthorized changes can be made to the file, whether in hard copy or soft copy. So having a register to access the file vault, or having a approval system that, okay, if you want to open the file and put something, you need approval. If you want to access the file, you need approval. Such kind of system should be set in the firm. Now, one law obviously is there that we need to maintain the documentation for 7 years. So from the date of the audit report plus 7 years. So this is the requirement SQC1. Very, very important, because if any inspection opens up before 7 years, you need to have that file with you to demonstrate. If the inspection is opening up after 7 years, then yes, I agree. There is no need for you to keep the audit file. It can be destroyed, whether it's hard copy or soft copy. But every firm has to maintain the audit file for 7 years to be on the safer side, because we don't know when we sign off. You can keep 8 financial years. So definitely everything is covered in the last year. But this is very, very important. SQC1 has mandated it, and there is no excuse on this. Okay, so because of the importance, I will just recap performance. When I spoke about performance, again, if you come to the beginning, okay, quite a bit on performance. Okay, so we spoke about having a policy. So let's put it very simple. Your firm should have certain policies and procedures for audit engagements and assurance engagements. Have a policy that talks about how to do the audit, that can have a reference to the audit manual, which has a detail of how to do the audit. So every single person coming to the firm, whether he's an article trainee or an associate or a senior or whoever, or a manager or a partner, he must have access to the audit manual so that he ensures that he does the audit exactly as per the requirements of the firm and he meets the quality standards. They're talking about ethics or consultation. Everything should be written in the audit manual, what to do, how to do. That's one. Second, you must have a system of preparer and reviewer sign off on the file. So you can demonstrate that supervision happened. Supervision should be only by seniors. That's most obvious. I won't get into that. You should have a system where team should be able to consult. For that, you should have a policy, should have free communication, maybe a dedicated email ID where he can send the consultation to the team or the particular partner who is the quality partner or head, get his views, document his views, close the file, close the matter. If there are difference of opinion with the person you consult, there should be a system to escalate to a higher authority who will close the matter. This all has to be in the policy. Last, we talked about an EQR. I told you where it is applicable, who can be the EQR, what is his role, what kind of documentation he should look at, and how he should close his review. That's all about the quality reviewer. This is only applicable for certain engagements, which is including listed entities, PIEs, banks, insurance. Okay, and firm can define the criteria for other risky clients. Like it can define any client with turnover of more than 500 crores. I want an EQR. Firm can decide. Managing partner can decide which client, which audit to put an EQR. Okay. So this was a very important part. In one of these parts is that you must have a knowledge data bank. The audit manual is there, but a knowledge data bank, which has all the books which the team needs. So bank audit, you should have guidance note on banking audit issued by ICI. If you have limited reviews, you should have SEBI regulations. And Companies Act, definitely you should have Income Tax Act. All the books and all should be there. That demonstrates that you are encouraging people to comply with quality. So that's one thing every firm should have, whether it's a physical subscription or an online subscription with access to everybody. And firm should keep on circulating guidance to the team. Now we're coming to a part called monitoring, which I said in the beginning. Monitoring is basically looking at whether all the quality process that we set up, is it functioning or not functioning. So one of the most easiest ways to do this is that you should do an inspection, as we call it, an inspection of the audits every year. SQC1 says that do an inspection once, at least every partner should be covered once in 3 years. Okay, so have an inspection policy. Let every partner come under that policy once in 3 years. Okay, and that inspection should cover, he should cover the file, the audit file, of course, and whatever we spoke about these elements just now. So let's talk about the leadership, whether leadership has made a policy, culture of quality is there or not in the firm. So every element of SQC1 should be inspected by doing a sample testing. Take a sample, check whether leadership has, communicated with the firm. There is a reward system. Let's say we said there is a reward system for employees. So we put that in. We talk about having client acceptance process. So if you have a checklist for the client acceptance, check on a sample basis. Is it filled? Is it being followed? Human resource. We have, let's say, prescribed criteria for taking on employee, competence checking, interview process, promotion process, appraisal process. Check all these and take a sample and see whether it is functioning. The last we talked about is the performance of the engagement performance, it's called. So you take an audit file, check the audit file, review the audit file, whether all technical professional standards are followed, AS, accounting standards, auditing standards, Companies Act. So let independent review happen of the file. and let that person give the points that, okay, this file is compliant, not compliant. Besides technical understanding, he also needs to see the compliance with auditing standards. He needs to see compliance with SQC1. So whether file was archived, was it locked up after it was closed within 60 days? Is there any way any unauthorized person can access the file? What I just spoke on the last pages, whether the engagement quality review has been appointed as per policy. Did he do his job? Has he signed off on the file? Have team managers and partners put time on the file, see their timesheets? This is how you check SQC1 monitoring, whether everything is there on the file. So I very quickly summed it up what it needs to be. Now, when you do this, okay, what will happen? So as a small point here, how do we plan the inspection cycle? How big is the firm? We have to see if there are many locations, plan at every location. Let one partner or 2-3 partner team go to the location and check whether that location is following all the processes. And also see, last year there was a monitoring done. Did the firm or that branch or that partner comply with the points given to him last year? So that's very good way. Every year this is required. You need to go and see. Okay, let's say you gave him 4 points, please improve. Next year you go and check, did he follow those points? Mostly he would have followed them. He will demonstrate, yes, see, I have put the new practices in place, new system in place, I have followed. Okay. If firm is very small, you can have external person doing the monitoring of SQC1. That's also fine and allowed. Now, like I said, what is the result of the monitoring? Either one, there are small instances where you need to improve the quality process. That's one. Or you have a major violation of the SQC1. There are two outcomes that will come. So obviously now you have found a violation, like let's say the partner violated, or let's say a particular branch is not following. How do we know branch? So let's say we reviewed 3 partners of a particular branch, then we understand that in that branch, no one is following, let's say, not properly following independence process, or not properly following client acceptance process, filling up of checklists, signing of checklists. So you even can identify a branch not complying. Or later you will find particular partner not complying. So you will give the partner a list of deficiencies. So deficiencies will be either specific, like non-compliance with a particular accounting standard, Ind AS, Company Act disclosure, that particular partner has to take care and ensure that he takes care in the other audits of his. Other point is a general point, like I said, not following independence properly, not following client acceptance properly, not having a proper HR function. Now, if not, means HR function is there, but not operating properly, like, up to the mark. So you communicate these deficiencies to their respective teams. If it is the full firm, you communicate to the full firm. You have a presentation, you talk about it. You say that, yes, we did this monitoring. These are the findings. Want everyone to know, please comply. Or arrange additional training for everyone on those points. Or you tell that particular partner, please take care next year, you have to follow, and this issue a formal memo to him. And with the particular branch, issue a memo to the branch that you need to improve these particular elements or systems. So that's a perfect way in which you communicate now all the activity. Annually, you do this exercise and communicate with them. And if you're doing it in the right spirit, definitely your firm will become a high quality firm. And every year it will become better and better. And finally, you will reach a stage where quality is not a problem at all. So some of the other monitoring. So I am more or less done with the presentation. This is the final few points. Monitoring should also have a complaints and allegation system. This is all fine. I think I've already spoken of most of these things. I'll come to the last part. Yeah, so like I said, SQC1 and SA220 have a difference. And one that SQC1 applies to all types of engagements and SA220 applies to audit. Okay. And SQC1 also needs the documentation of the partner's rotation and maintenance of all documents for 7 years, which is specific about that. SA220 does not go into that level, but it talks about all quality process to ensure that audit is done properly. You don't need to get much into these differences because from what I've explained to you, it is all basically applicable to audits, and SA220 says the same thing. The last is the part I have as a key takeaways. So why are we doing all this? So what is the most important part of quality control? One is the policy and procedure. Every firm have to have policy and procedure. No option about it. Please ensure that every department of yours is making policy and procedures. Now, as I said, policy procedures, you need to document each component of SQC1. Do not leave out even one. So every department have the responsibility to have the policy, implement the policy, and execute it and monitor the policy. The reason why we are discussing is also because of the new guidelines that have come is the audit quality maturity model, which is come out by ICAI, will be applicable from 23. So in this also, again, they are asking the same questions, more or less everything that I just discussed today. Policies, procedures, systems, softwares, HR system, HR function, documentation function, security, confidentiality, data integrity, data protection function. They're going to question all the elements of quality, and firm is going to be graded basis his quality performance, if he has these systems in place. So AQMM is coming and every firm would like to be compliant with it. So let's have these policies in place. Let's have the systems in place and have a high score on the AQMM. If the score is high, then you are a good quality firm. Obviously, NFR has also come with the quality inspection guidelines, which also revolve around quality control. As I said, again, you need to identify responsible persons who will lead these elements. Okay, so we're talking about leadership, identify the leadership person. Independence, identify the independence and ethics person, ethics champion, ethics partner, whatever. HR function, HR head should take over. Audit engagement performance function, there should be either the head of audit or any person taking charge of the quality should take charge of quality and engagement performance. So that's how we should have a system set up. Compliance of the code of ethics has come up in 2020, which is the revised code of ethics. So that's also very important now. Then we are looking about putting minutes of meeting between partners on all these matters. You should ensure compliance of all the policies. The firm should ensure. And remediation and monitoring is the one place that is the weakness in all firms. All this gets achieved, but the remediation monitoring part is the weakness we have seen. So this is something all firms have to take care. Okay, so I don't know, in the interest of time, we're a little bit hurried, but I think we have tried to cover everything that was required. I am largely done with my presentation. And thank you very much. If you have any questions, we can look at it. Otherwise, I think the next speaker is also waiting for his turn. Yeah, so I've just opened up the question box and we have 2 questions here. We were the statutory of the company got rotated due to Companies Act. Now then we are only tax auditors. Whether this will impact our next appointment after 5 years as an independence issue. Okay, now to answer that question, the 5-year rotation requirement that is there is coming from the Companies Act. Okay. If you ask me the question, the Companies Act says that you rotate out after 5 or 10 years. If it's a firm, it's 10 years. But there is a cooling off period. So in that cooling off period, you're not supposed to do any work with the client. So in my view, you need to move away from the client. You cannot be servicing the client from an assurance angle, and tax audit is also an assurance engagement. So in my view, you need to move out of the tax audit part as well, because then the cooling period starts off. I hope I'm able to answer that question. You can, of course, consult it in more depth. You'll have to get into more depth and consult. But this is my view on it. In case of the next question, in case a partner is not exclusively associated with the CA firm, can he act as engagement partner or the EQR in case of a listed company? I'll explain. I'll reply that in two parts. So if he is not associated with the CA firm, he cannot be the engagement partner because firm has been appointed to do the audit. So you have to be a partner of the firm to sign the audit report. So to answer the first part, he needs to be the partner of the firm. Another partner from outside cannot be signing the financial statement and the audit report. EQCR, yes. In EQCR case, the SQC1 allows you to consult, allows you to take external, the video is off, sorry. In EQCR case, you are allowed to take an external expert, and it is a common practice to have an EQCR from another firm. Okay, so many large firms, because listed companies are normally handled by a large firm. So normally internally they have one partner looking at another partner becoming the EQCR. But yes, if you go into the spirit of SQC1, it does allow you to associate a person from outside the firm. Okay, I hope those answers help. Is there any other matter that I need to be looking at somewhere? Okay, so I think it was a little rushed up, but
Yes.
I've just tried to summarize everything. I think we've covered the broad framework of control. Basic takeaway you need to have is that make a policy, make a system, make a monitoring system, and let that repeat every year. And I think definitely if you're starting off, it's difficult, but within a period of 3 years, if followed in spirit, this is something very easily achievable, no difficulty at all. So that all said, I hope that this session helps everyone, and I've been able to give some takeaways as to practical implementation. Thank you so much, everyone, for your patient listening. Yeah, I'll send it over to the next person.
Yes. So myself, CA Nishthat Shetty here. I am here to give a big vote of thanks. Thank you so much, CA Aleem Lilani, sir. Thank you for delivering the session on quality control. You not only provided quality control at the level of the firm and audit procedure, but also provided the topmost quality in delivering the session as well. We learned in a nutshell about quality control, and we now know that it is a very continuous activity. We must assess, improve, start again. So
Yes.
Thank you so much for delivering that wonderful lecture.
Thank you so much for the opportunity.
Okay. Yeah, thank you, sir. So we may now move on to the next session. The next session is on the topic SA240, the auditor's responsibility relating to fraud in an audit of financial statements, and SA250, consideration of laws and regulation in an audit of financial statements, by CA Kumar Raisinghani. So I would like to introduce the speaker first. Kumar B. Raisinghani is a trainer, is a chartered accountant, qualified in 2010, and All India ranked 39 at the CA intermediate level. A young professional with excellent educational achievements of more than 11 years of post-qualification experience in auditing, training, and financial reporting, including accounting standards, Indian Accounting Standard, Ind AS, and International Financial Reporting Standards, that is the IFRS. Mr. Kumar has conducted corporate trainings on auditing standards and financial reporting aspects to chartered accountant firms in Mumbai. His financial reporting experience includes the implementation of Ind AS and conversion to IFRS of wide range of businesses, including law firms, financial services, BPO, oil exploration, and retail. The experience gained from these jobs assists him to incorporating the real-life case scenarios into his trainings. So I may now like CA Kumar Raisinghani sir to take on the session from here.
Thank you for those kind words and thank you for that introduction. Hi, good evening, everyone. So I'll just share the screen. Yeah, I hope the screen is visible and I'm audible.
Yes, the
So,
audio video is perfect.
A very warm welcome once again, everyone, to this second session for which is in which we cover SA240 and SA250. While before we start and discuss in detail about these two standards, I would like to just reiterate a few things which you would have probably heard in the previous sessions or which you might already know, but this is just to lay down the platform. So as in when we talk about standards on auditing or when we talk about audit, we understand that we require the financial statements to be audited so that the users have more confidence on the numbers that are provided by the financial statements about the information that has been conveyed through these financial statements. So our job as an auditor, rather it exists because it helps the it helps increase the confidence of the users on the financial statements, and this we do by expressing an opinion on financial statements. This is the main objective of our audit, which is also confirmed by SA200 on the overall objectives of audit. So our duty or our objective of an audit is to express an opinion on the financial statements as to whether they give a true and fair view and whether they are prepared in all material respects in accordance with the financial reporting framework. So it could be Schedule 3 in AS or so on. So this is our main reporting responsibility. Over a period of time, we have seen a lot of amendment come. So it could be an amendment to Section 143, subsection 3, which requires us to comment on, say, internal financial controls of the company, which requires us to comment on, whether the directors are qualified, not qualified as per the prescribed criteria. Or it could be an amendment to 143.12, which, requires reporting by the auditors on fraud or suspected fraud. So over a period of time, our profession has seen a lot of amendments. The reporting responsibilities of the auditor have only increased over a period of time. So even if you take CARO 2020, for example, and compare it with the previous version, so there are around 25-30 additional reporting requirements that have been put on to the auditors. So having said that, although the reporting responsibilities have increased over a period of time, we still need to understand that our main objective or the basic purpose is to express an opinion on the financial statements. Everything else follows from that purpose. So it is in that light that we need to understand these two standards, which is SA240 as well as SA250, because it becomes very critical to have a macro level objective in mind. So just I thought I'll reiterate these things. Also, having got this opportunity to speak on SA240, I also need to highlight that the fact that there is a lot many changes happening in the regulatory environment, as Mr. Aleem pointed out that NFRA is coming up with their reporting requirements or their audit inspection guides. So their expectations or their expectations from us as a profession might be something more detailed or whatever. We need to align it with the basic objective as laid down in SA200. So having said that, we start the session with this intention in mind, and I first introduce you to a risk-based audit approach, which is suggested by the standards on auditing. Now, when these standards on auditing came for the first time in 2009-2010, these were preceded by the auditing and assurance standard. Now, these were amended, introduced to bring it more in line with the international requirements, which is, so our standards on auditing today are in line or comparable with the international standards on auditing. And these standards require us to follow a risk-based approach to audit, whereby we as an auditors, we say that we have to express an opinion on the financial statements, but now financial statements might include various line items, various assertions, various items. So I cannot obviously devote equal time to each area. So there, the risk-based audit approach is very helpful to the auditor. So what we do is we first plan the audit, wherein we term it as the risk assessment phase or the risk identification and risk assessment phase. whereby we as an auditor, we identify certain factors that may cause the financial statements to be materially misstated. Now these factors could be from, say for example, a recent change in an accounting standard. So say for example, India's 115 on revenue has been recently introduced, if we take as an example. So it might indicate that there is a high degree of risk associated with a misstatement due to revenue recognition because it is a probably new standard. Or it could be from external factors, like in the COVID year, there would have been risk that inventories or debtors or even other current assets are overstated, because of all the restrictions and everything. So under the risk-based audit approach, what we as an auditor are expected to do or have is something called as an identification and assessment of the risk, wherein we study the business of the client, we study the internal controls, we see what are the changes happening in the external environment, in the accounting environment, in the reporting framework and all those things, and thereby we identify the risk as high, medium or low about what are those events that could cause a material misstatement in the financial statements. Now here again, a material misstatement in a financial statement could be a result of fraud or error. So as we all know that fraud is something that is intentional, whereas error is unintentional. So at the risk assessment stage, we need to have a risk of material misstatement identified and assessed as high, medium or low. This we do at the overall financial statement level also, and at each assertion level also. Having assessed the risk, I would now design my audit responses. So if, for example, I have assessed the revenue to be a high risk area because of introduction of new standard, which is Ind AS 115, I may have to then suitably upscale my audit and design procedures or plan my audit procedures so that I'm responding to that risk of material misstatement. And I'm actually coming to a conclusion whether the revenue number is true and fair or not. So in the risk response stage, which is basically the execution stage, I go on and see whether the events which I had identified at the planning stage, have they actually occurred? Have they actually caused a material misstatement to the financial statements? It is at this stage that we collect audit evidence through performing various audit procedures that could be test of controls or it could be substantive procedures as well. Having collected all the audit evidence, I look at whether the audit evidence is sufficient and appropriate, whether it meets the qualitative as well as the quantitative thresholds that are prescribed by the standards on auditing. Apply my professional judgment on, as to whether my understanding of the business is in sync with the numbers that have been reported in the financial statements, and arrive at an opinion on the financial statements. So it could be an unmodified opinion stating that financial statements give a true and fair view, or it could be a modified opinion. So this is how our audit is, structured to happen in these three phases, which is the risk assessment, risk response, and the reporting phase. Now, this introduction was required before we go into SA240, because if you understand that each and every standard on auditing derives its essence from this structure to the audit. Assuming that this is very clear to everyone, we go in detail to study the requirements of SA240. Now, as the title suggests, SA240 deals with the auditor's responsibility relating to fraud in an audit of financial statements. Now, fraud as a term has been, has to be used very carefully in all senses. So, SA240 talks about, in general, what is the auditor's responsibility in relation to misstatements arising from fraud. It is basically expanding on the idea of SA315 and SA330, which we just saw in the previous slide, that in the planning stage, I have to identify the risk of material misstatement. Now, this risk of material misstatement could be due to fraud, or it could be due to error as well. Now, assessing the risk of material misstatement due to fraud might require certain special considerations, which is expanded in detail in SA240. Right? So when we are discussing SA240, we are basically trying to cover these 5 aspects, or in terms of overview, we are trying to cover these 5 aspects of SA240. First, we need to understand what is the scope of SA240, how does it apply to an audit. Then we need to understand what exactly is fraud. whose responsibility is, for prevention and detection of fraud? What is my responsibility as an auditor? And what are the inherent limitations of audit because of which I may not be always able to identify a fraud as, something which has already happened. So as I mentioned, talking about the scope of SA240, it expands on the idea of risk assessment as laid down under SA315 and the idea that we need to design audit procedures. So how do we identify, that there are certain events which may cause the financial statements to be materially misstated due to fraud? So I would like to give one example. So say, for example, when we are doing a particular audit, we observe that the remuneration of key managerial personnel is dependent or is driven by the net profit that is reported. So here we may say that there is an incentive to the management to report a higher profit number so as to increase their remuneration, right? So this would become the identified risk, and it could be a risk of material misstatement due to fraud. Then we need to understand what are the internal controls in place, specifically relating to management override of control and all those stuff, and design our audit procedures along those lines as to then conclude whether we have sufficient appropriate audit evidence or not. Right? So this is how the scope of SA240 is. As an auditor, I am not the one to determine whether the fraud has actually happened or not, because it is for the court of law to decide whether something, whether an act is to be termed as a fraud or not. My duty as an auditor, as explained by SA240, is to identify the risk factors or identify the events that may cause the financial statements to be materially misstated due to fraud. Having identified those events, then I need to design my audit procedures. The ultimate conclusion relating to fraud is obviously not in the hands of the auditor. Also, when we talk about the meaning of fraud, we need to understand that fraud is a broad legal concept, right? So it might involve a broad range of definition. But when we are talking about fraud in terms of SA240, we are mostly talking about fraudulent financial reporting. That is, we are talking about those intentional acts or intentional omissions which will cause the financial statements to be materially misstated. So we are concerned with fraudulent financial reporting as such when we talk about fraud, and also about defalcation of assets and all those things, or misappropriation of assets, right? Then we need to understand that as an auditor, okay, this is the meaning of fraud. For me, I need to identify and assess the fraud risk factors. I also need to pay attention that SA240 is very clear that the primary responsibility for the prevention and detection of fraud lies with the management. How do they discharge this responsibility? By creating a culture of honesty. So management per se needs to have a control environment whereby fraud is deterred. There are adequate control points to help the management detect the fraud, and once the fraud is detected, the management should take appropriate action. So ultimate responsibility or the primary responsibility of fraud detection lies with the management. My duties as an auditor is restricted to identifying the fraud risk factors, and having identified those fraud risk factors, perform my audit procedures accordingly. Okay, so that is the distinction between the management's responsibility and the auditor's responsibility. Having discussed all these factors, just a second, I'm so sorry. I'm sorry. So having discussed all these factors, we need to understand that our audit suffers from certain inherent limitations. So when we do audit as per standards on auditing, we are only expected to give a reasonable assurance. We cannot provide absolute assurance because we are not doing an investigation, right? So we as an auditor understand the business, understand the internal controls, rely on the internal controls, but we need to accept the fact that internal controls have their own inherent limitations. We need to understand the fact that audit has to be conducted in a time-bound manner. So the inherent limitations of auditor forces, or might create a scenario whereby it is not a guarantee that all frauds or, something might always get detected, because these may be concealed by the management, using various complicated or sophisticated schemes. However, this cannot be used as an excuse for for the auditor. So if a fraud has been, so say for example, an auditor expressed an unmodified opinion on the financial statements, but later on, say unfortunately, there is a fraud in the entity. So you cannot obviously point out, you cannot directly point out the auditor that it is his fault. We need to understand, the courts need to understand in this case whether the audit was conducted in accordance with standards on auditing. Was the auditor skeptical? Did he design the audit procedures? Did he assess the risk in accordance with what is required by the standards on auditing? So having concluded on all these factors, only whether we can then, conclude as to, how or what could have been done to avoid this. So as I said, when we talk about SA240, we are broadly talking about two types of fraud. One is the fraudulent financial reporting, and the other is misappropriation of asset. Let us deep dive into these two things, and let us try to understand how each of these things are, linked to the various phases, which is risk assessment phase, risk response phase, and the reporting phase. So one type of fraud that an auditor is concerned with is the fraudulent financial reporting. So basically, when we talk about fraudulent financial reporting, we are talking about, say, for example, managements fraudulently, manipulating the profits number, manipulating the sales number to achieve a desired presentation. So say, for example, showing leased assets as an own asset intentionally is an example of a fraudulent financial reporting. Not adhering to the cutoff principles and intentionally showing next year's sales as current year sales just to improve the sales number for the current period is a fraudulent financial reporting. Now, fraudulent financial reporting can be performed or can be perpetrated by the owners and management, or it can be also perpetrated by employees. But we are more concerned here with fraudulent financial reporting by the owners or management. So now we need to understand, why would the management of the organization, or why would an owner indulge in something like a fraudulent financial reporting? So as I gave you an example, a small proprietor might consciously, intentionally understate the profits amount so as to pay lower tax, or the management of an organization might rack up the profit numbers just to have a positive image within the shareholders, right? Or just to avoid some hostile takeover. So it could be various reasons because of which the fraudulent financial reporting can be committed or perpetrated by the owners as well as the management. Now we need to understand the how part as well, because this is where from we'll get the fraud risk factors. So I take Satyam for example. It was a case of fraudulent financial reporting, right? Wherein the CEO Mr. Ramalingam Raju, what he did was he override the controls intentionally. So we need to understand, is there a scope for override of internal controls? A simple example here could be, routine journal entries being passed by the CFO rather than the junior account staff, right? So it could be an example of override of controls. So as per the entity's process, the year-end journal entries are to be passed by the junior accountant and then approved by the CFO. But if we observe something like CFO himself, passing the year-end journal entries, so it might be the case of override of control, because he might be trying to manipulate certain numbers through provisions or something like that, right? It can also be committed through false or incorrect transactions, specifically or more so with related parties. So it might be certain bogus transactions or something like that, through collusion, or by adopting accounting policies that are not in line with Ind AS, or you manipulating the interpretation in such a way so as to achieve a desired presentation. So or maybe exploit any weakness in the internal control systems. These are the various techniques through which the management might indulge in fraudulent financial reporting. If we are talking about fraudulent financial reporting from management, the impact would generally be very high, because they'll not be concerned with the smaller amounts. The impact of this would be very high. So when we talk about how much, it could be a large amount, because the management is in position to override the controls. Also, fraudulent financial reporting can be committed by employees to achieve their personal benefits. So say, for example, an employee is showing up a higher net profits number so as to just, ensure that a particular ESOP gets vested to him. Or say, for example, a junior accountant, not recording receipt from debtors, or just to manipulating the books of accounts to cover up for the assets that have been stolen by them. So this is how the employee, this is why the employee could perpetrate the fraudulent financial reporting. Again, speaking on the how part, they might do so by entering incorrect transactions, or collusion, or manipulating the accounting policy or something like that. But when we talk about the fraudulent financial reporting from employees, it is generally not as in terms of magnitude, it might not be that as much high when we compare it with the owners and management. Another type of fraud that SA240 requires us to address is, misappropriation of assets. So fraudulent financial reporting was intentional misstatements in financial statements so as to achieve a desired result. Whereas misappropriation of assets could be a case like stealing of inventory, or taking away the money received from debtors into personal account, or using the funds of company for own purpose. So it could, or even a small stationery theft or something like that. So this could be misappropriation of assets. So generally, employees might be more inclined to this type of fraud, and management might not be that much interested in misappropriation of assets. In today's world, misappropriation of assets could also take form of whereby, the employee is using certain IP or trademark processes of the entity and leaking it to the competitors. So this could also be a misappropriation of asset, which is a fraud covered by SA240. So why would employees or owners or management indulge in misappropriation of asset or perpetrate misappropriation of asset? The answer is very simple. So as for the personal benefit, right? This can happen through management override of controls, or it could be exploiting weakness in internal controls through colluding with other employees, or just partaking overlapping the internal controls that they have established. The amount might be a small amount, might be a large amount. It clearly depends upon the need of the individual. So when we talk about fraud, as I mentioned, there are two types of fraud that we are mainly concerned with. One is the fraudulent financial reporting, and other is a misappropriation of asset. Fraudulent financial reporting by the management would be the more serious one out of this. So now what I need to do as an auditor is, when I'm understanding the business, when I'm understanding the internal controls, I need to keep an open mind as to whether there are any factors as stated in this slide or the previous slide that may cause or create an incentive for fraudulent financial reporting or misappropriation of assets. When we talk about fraud, there is one important concept of fraud triangle that has been developed by the forensic auditors, which might be very relevant for us as well. And we can see the elements, these elements in SA240 as well being used indirectly. So the fraud triangle basically, represents a scenario as to whenever a fraud happens, it says that any fraud will involve these three elements, that is pressure, opportunity, or rationalization. So pressure could be, so say for example, when we are talking about fraudulent financial reporting, in the COVID years, the management might have the pressure to report a higher earnings so as to present a rosier picture to the shareholders, right? So they may have the pressure to present a good picture, or they may have a pressure to reduce tax. They might be able to present a rosier picture, or they might be able to, present inflated number of sales or inflated number of profits because of the opportunity. So as I said, if the CFO has been given power to pass year-end journal entries, he might reduce the provision for bonus, or might reduce the provision for warranty, so as to report a desired number of profit. So this was the opportunity that was used by the CFO, which is by overriding the internal controls. Rationalization is the fact that the perpetrator might always convince you that, or might convince himself that whatever he is doing is, just for the betterment of him. So he might say that we are already paying too much taxes, So, and government is not doing anything or stuff like that. That might be a justification or rationalization of the act by the perpetrator of fraud. So when we are doing an audit, if we come across any such situation, we need to identify it as a fraud risk factor, do a risk assessment, incorporate it in our risk assessment, and include it in our plan and take necessary and appropriate steps. Now, there are certain factors that we need to, ensure so that we comply or follow with the procedures that are given as per SA240. There are two things that are very critical. The first one of them is engagement team discussion. Now, whenever we do audit, especially large companies, so a large company might have branches that are spread across India. So a CA firm might have engaged various of its staff or team members on that assignment. What needs to be ensured is that there is an active and constant discussion between the engagement team, and more importantly at the planning stage, which is we call as a briefing stage, and also at the reporting stage, which we call as the debriefing stage. At the planning stage, all the engagement team members needs to be highlighted the fact that they need to be skeptical, right? The audit partner needs to highlight the importance, share his experience. So it is suggested by the standards on auditing that we have an engagement planning meeting amongst the team members, whereby the partners and other seniors lead that meeting and share their experiences of this kind of audit in the previous years, or similar audit in other industry. What was their experience? Stuff like that, because it will help the junior staff to understand, as to how should they approach the audit. So engagement team discussion is very, very important. I have one example on the slide, which I'll just illustrate you. So to highlight the importance of engagement team discussion. So say, for example, audit partner has a knowledge that owner manager has occasionally strayed too close to ethical boundaries. So I, as an audit partner, I'm aware that this manager, who's also the owner of the business, is always walking on the gray area. He is always on the, just on the marginal line of complying with the law. Then this information audit partner has. The audit senior has discovered while auditing, while talking to the sales manager, that there are certain clients that the owner handles exclusively. This information audit senior shares with the audit partner. At the same time, audit junior has certain information, and he was told by a junior employee that some material purchases had been shipped directly to the friends. So if we relate all these three things, we might come to know that there is something wrong or something suspicious transactions that are going on, whereby the owner manager might be shipping certain goods directly to his friends without recording the revenue, right? And without paying the taxes on that. So now in this case, we need to understand all these three information cannot be with the same person. The audit partner might not have the third information because he's not on the field throughout the audit, right? So this is where the role of juniors is very important, whereby they highlight anything that is suspicious, share it with the team members, and together, if we put all the three puzzles together, we might be able to identify the fraud risk, or so that is where engagement team discussion becomes very, very important. So engagement team discussion is important. Second aspect that is very important here is professional skepticism. Now, when we talk about professional skepticism, it's a very important element of our audit. When we talk about professional skepticism, we are talking about, an auditor having a questioning mind, asking right questions to right people. Professional skepticism by itself does not mean that you are always doubting on the integrity of the management. So professional skepticism does not mean converting an audit into an investigation, right? So it does not mean that I have to be always questioning the management or something like that. But the moment I find something contradictory, the moment I sense that there is something fishy going on in the organization, I need to be skeptical. I need to support my evidence for a high risk area with a corroborative audit evidence. So say, for example, when I'm trying to understand the internal controls relating to purchases or internal controls surrounding the journal entries, I might speak to the audit committee regarding those internal controls, and I might also speak to the executive directors, so as to just understand whether they have the same understanding of those internal controls, right? So this is professional skepticism. Rather than just relying on one source of evidence, I'm just trying to corroborate an audit evidence. I'm trying to then link the whole picture. So professional skepticism means always having an open or an open eye on the situation, being aware about the situation. It does not mean that you have to doubt the integrity. However, it also does not mean that you have to always trust given the past experience. So if there has been the audit since last 3 years and everything has been fine, I cannot carry on that impression in the 4th year. I still need to be skeptical, because that is where our independence of mind as well as independence of appearance would help the auditor. So a professional skepticism has 4 elements as have been defined by standards on auditing. I as an auditor need to recognize that management can always commit a fraud. This does not mean that I'm doubting the integrity of the management, but I'm saying that I'm always open to the possibility that howsoever good the internal controls are, the management might be able to override them. So this does not mean that you're doubting the integrity of the management, but this also does not mean that you can assume the honesty based on past 3 years or something like that, right? So risk override of controls is a default, or there is a rebuttable presumption that it is a high risk area, right? The second element of professional skepticism is having a questioning mind. So just not getting satisfied with half the answers. So say, for example, we were doing analytical review, and we observed that rent has increased in relation to previous year, and the reply that I received from the management is that the rent has increased because they had stored more units in the godown, and they had taken additional godowns as well. So this does not sound to be a satisfied answer. I need to have the breakdown of the total increase into various factors so as to understand whether the increase is actually aligned or not. So it is having a questioning mind. Asking questions is one of the important aspects of audit. Third element is being alert, like how the audit junior was alert that some employee has told him and he needs to communicate that information to his senior. So if I notice, while it could be a simple example, I might be a first year article, and while I'm vouching for the transactions, I might have observed that there are certain expenses of the managing director that are approved by the managing director himself. So I need to be alert to this kind of situation and say that how is this aligned? And I need to be careful. I should not be negligent, right? I should not overgeneralize when drawing conclusion. I should not overlook unusual circumstances. If there is a red flag, I need to address it very carefully. Okay, so as I said, while we are performing our role as an auditor as per SA240, these 2 elements, that is engagement, team discussion, and professional skepticism, plays a very important part and will go a long way in helping us discharge our responsibilities. I go to the next slide. So this was all at the planning stage. So at the planning stage, I need to identify whether there are any factors that may cause the financial statements to be materially misstated. So it could be, the factor could be, say, for example, management bonus driven by profits number or something like that. Then if I have identified a risk at a planning stage, I need to determine whether that risk is at an overall level or is it at an assertion level, right? So assertion level risk could be, say, for example, where I've identified risk that inventory, there is a risk that inventory might be misappropriated. There is a risk that there could be a theft of inventory which might go undetected. So this becomes a risk at an assertion level, whereby I'm talking about the existence of inventory. Whereas management overriding internal controls is a risk that exists at an overall financial statement level. Because when the management override controls, they would not cause a misstatement to a particular area. They would cause cause a misstatement overall in the financial statement. So they may cause a misstatement to the sales, to the debtors, to the bank balance and everything. So I need to classify whether the risk that I've identified is an overall financial statement level risk or an assertion level risk, because my response would be would go accordingly. So if I've identified a high risk of material misstatement due to fraud at an overall financial statement level, how I would respond is I might involve my engagement team should be then I may say that I'll need only experienced team members on this engagement to take up this audit, because it's a high risk area. Whereas if it is an assertion level risk, I may say that, okay, inventory might be allotted to a person with a good experience. So having identified the risk as high, medium or low, I need to say whether the risk is at an overall financial statement level or at an assertion level, right? Then I need to always consider the risk for management override of controls. There is a rebuttable presumption that management is always in a position to override the internal controls. So internal controls are established by the management so as to ensure that financial statements give a true and fair view. But many a times they may themselves override those controls. Like I gave you that example that year-end journal entries are passed by the junior accountant, then reviewed by the senior accountant, and then approved by the CFO. However, so this is the internal control scheme that has been established. However, if I observe certain situation whereby the CFO himself is passing the journal entries, that it might indicate that this is override of controls by the CFO, because his duty is not to pass the journal entries, his duty is to only approve. As to why at a CFO level he is passing those journal entries. All right. So how do I respond to this risk of override of internal controls? So SA240 requires that at the year end, we do something called as a JV testing. So JV testing is a routine exercise that should be incorporated in all the audits, whereby we as an auditor review the year-end journal entries. So this could be the entries for provisions, this could be entries for depreciation, or it could be entries for management bonus, or it could be entries relating to some consignment sales, or something that is passed as an year-end adjustment and not as a routine transaction. So I can do JV testing in terms of who passed the journal entry. Was it authorized? What was the amount? Did the audit committee approve these journal entries? Or was it passed on a holiday, for example? Because if it is passed on a holiday, it might be a clear suspicion. So we have various computer-assisted techniques that we can use here for JV testing. Another critical area that we as an auditor need to incorporate in our audits is a review of accounting estimates. So obviously I cannot comment on the correctness of the accounting estimates. However, I need to ensure that whatever accounting estimates are made by the management are reasonable. So I need to review the accounting estimates. So how can I review them? So say, for example, if the estimates was made as of 31st March and we are closing the audit in the month of June. So I need to consider what all information has been available in the next 3 months. Is my accounting estimate still in line with the updated information that has been provided to me in these 3 months, right? I might do a retrospective review of these estimates. So say, for example, last year, the estimate for provision for doubtful debts was 5%. However, during the current year, I've observed that the bad debts have been 15%. So then this somehow tells us that last year accounting estimate was probably not appropriate, probably not reasonable. I need to just do a retrospective review as to what were the previous estimates and were they in line with the actual results that have taken place in the current year. I also need to do a retrospective review of management judgments. Now, accounting standards, specifically Ind AS, require a lot of use of judgment on the part of management. So it could be various areas as to whether the transaction is a sale and lease back, whether it is a financing transaction or stuff like that. So I need to do a retrospective review as to what were the judgments used by the management in the previous year. Did they fall in line with the actual results that have come up? So all these things I need to do at an overall level. These are generally done towards the end of the audit. And I would always require a key engagement team member who has some degree of experience to perform these, these steps. Also, what also needs to be done to ensure that we have properly addressed to these risks of material misstatement due to fraud or due to error is, we need to perform analytical procedures on overall conclusion. So I might do a simple analytical procedure to analyze the last 5 years GP trend as to whether it is in line with my understanding of the business. I might do a last 5-year trend for current ratio. Here, going concern assessments might also become a very important part, right? And wherever it might so happen that I might get into a loop that, say, for example, initially I had identified the risk to be a medium level risk, but I got certain information or I got certain violations reported to me, whereby I might reassess the risk to be high and then repeat the entire procedures and go to the reporting. So this is how I as an auditor should be responding to these risks. Other aspects that are relevant and that should be kept in mind throughout the audit to ensure that we comply with SA and more specifically SA240 is taking management representation letter. So obviously this taking a representation letter does not absolve me from my duty as an auditor to express an opinion, but management representation letter would serve as an acknowledgement that yes, management has accepted their responsibility, that preparation of financial statements is a responsibility of the management. Laying down internal controls is the responsibility of management. So these are the things that I might take in a management representation letter. On a timely basis, I'm required to communicate with the management as well as the audit committee. Right. I might also be required to communicate with regulatory and enforcement authorities. So an example could be a fraud reporting to MCA pursuant to section 143 subsection 12 if fraud crosses, if a suspected fraud causes a particular threshold. Right now, having said this, there is an age-old adage that is still relevant and will always be relevant, is work not documented is work not done. Having understood the entity's environment, having assessed the risk, having implemented those responses, if I fail to document all these things, the regulators or the enforcement authorities might still say that the audit was inaccurate, incomplete. So please keep in mind that we need to document all these compliances. So many firms have a checklist for fraud response. We document our engagement. So there is a requirement that engagement team meeting should happen. So it can be documented by documenting the minutes of those meetings. It's a very important takeaway for us that we need to keep these documents on our file so as to ensure the compliances. Right. Last aspect I would like to add on this slide is that QRB has been conducting a review of audits conducted by the chartered accountants, and they have been coming up annually with certain observations of their review. In relation to 240, they had two major observations. The first one was that the auditor failed to document the risk of material misstatement due to fraud risk factors. So as I said that we should identify fraud risk factors. So for example, management incentive linked to profit numbers. So it's a fraud risk factor. So this they observed that was not documented in one of the files. And another observation that they had was the auditor did not document in the management representation the result of the assessment of the risk, that financial statement may be materially misstated due to fraud. So all these aspects we need to have on our file as well as on return representation. So if you see, their observation was mainly on documentation and management representation itself. Right. So with this, we have completed SA240. I'll just excuse myself for 1 minute. All right. So assuming that we are all clear about the requirements of SA240, I'll just brief up what we discussed about SA240. So we say that as an auditor, I'm responsible. My basic responsibility is to express an opinion as to whether the financial statements are materially misstated due to fraud or error. So this I do by following a risk-based approach to the audit, which involves the risk assessment phase, the risk response phase, and the risk reporting phase. In the risk assessment phase, I identified if there are any factors that might cause the financial statements to be materially misstated due to fraud. Example, management incentive or weak internal controls or opportunity for override of internal controls. And then I designed my audit responses accordingly. Regardless of the assessed risk, there is a rebuttable presumption that there is a risk for management override of controls. So I do routine JV testing at the year end as a part of my normal audit. It is important that throughout the audit, we exercise professional skepticism, that is, have a questioning mind, being alert to the situation, and we encourage engagement team discussion throughout the audit, and more so having a planned and structured meeting at the start of the audit and at the end of the audit, whereby the partner and the other senior members of the audit team lead those discussions and guide the junior members to discharge their responsibilities. What is important further is that we need to document all these things so as to ensure that, probably show that we have complied with SA240. And we need to obtain written representations from management also, because the primary responsibility for prevention and detection of fraud is with the management. Okay, so having discussed SA240, we now take up our next standard, which is SA240, consideration of law and regulation in an audit of financial statement. Now, I obviously decided to devote more time out of the allotted 1.5 hours to SA240, because that was more critical when I compare with SA240. This does not mean that SA240 is not relevant or less relevant. It is just that SA240 being the more critical one, we decided to devote more time on that standard. Now, SA250, again, before we start SA250, we need to reiterate the fact that my responsibility as an auditor is to express an opinion on the financial statement. Right now, who is responsible to comply with law and regulation? Obviously, the management. Now, why is it relevant for me? Because, so say for example, the management has violated, say for example, a Companies Act provision. It might result in, in some fraudulent or rather some penalties, right? And if I don't record that penalty, my financial statements might be materially misstated. Many a times, non-compliance might also have an impact on the going concern. So say, for example, a bank or an NBFC not complying with the critical laws or regulation that are, approved or given or governed by RBI, then it might lead to the cessation of the business also. So compliance of law and regulation is a responsibility of the management, but I as an auditor need to evaluate to a certain extent as to whether the entity has been compliant or not. Obviously, I'm not going to give, or no, I'm not expected to give a certificate to the company as to whether they have complied with all law and regulation. That is obviously not feasible, but I will study as in an audit. My objective would be to have an understanding of what are the various law and regulations that are applicable to the entity, whether on my prima facie assessment, have they complied with those laws. Now, out of these laws and regulations, some of them might have a direct implication on the financial statement. So say, for example, an entity not adhering to the provisions of Income Tax Act while making a computation. So this might result in provision for tax being understated or overstated. Right. So there are certain laws and regulations that have a direct impact on financial statements, and certain other laws which fall in the second category. I need to design my audit procedures based on the risk assessment as to what is the non-compliance risk. How do I assess whether the risk of material misstatement or risk of non-compliance? Again, the internal controls. So if the entity is organized, they have their in-house legal personnel, they have a compliance calendar. So I might say that, okay, if these controls are operating effectively, the risk of non-compliance is lower, right? But I'll still perform certain audit procedures, right? So this is just the overview of SA250. Now let us deep dive into the standard. So just like the previous thing, there are 5 critical things in SA250. First, we need to understand what is meant by compliance, what is meant by non-compliance. Then we need to understand, draw a line as to what is the responsibility of the management, what is the responsibility of the auditor. As I mentioned, that compliance with law and regulation is the responsibility of the management. My responsibility as an auditor is to express an opinion on the financial statements, right? My responsibility is not to give a compliance certificate per se when I'm doing an audit report or something like that. Then what are the scenarios or situation where I as an auditor might be required to report on identified or suspected non-compliances, and throughout the audit, how do I comply with the requirements of documentation? Now, let us understand with the overview. Let us start with the overview of SA250. So there is one question in the Q&A box, but I suggest we can take it up towards the end of the session if that is not a problem. So I'll just take that queries all in one go at the end of the session in the dedicated time slot. Yeah, thank you. So SA250 classifies the law and regulation that are applicable to the entity into two categories. The first category is those laws that have a direct effect on financial statements. So as I told you, for example, Income Tax Act. If the entity is non-compliant with the Income Tax Act while doing a computation, it might have a direct impact on my provision for tax, right? So another example could be Companies Act. So if the entity has not complied with the requirements of Section 133 in relation to the accounting standard, it might cause a material misstatement in the financial statements. As an auditor, I'm more concerned with these kind of law, that is, that have a direct impact on the financial statements. That is, they have an impact on the reported amounts and numbers in the amounts and disclosures in the financial statements. Then there is other category of law whereby the provision, those we are talking about those law which the entity is allowed to conduct, whereby the entity is allowed to conduct its business. So example could be law relation to pollution control or something like that. These laws generally do not have a direct impact on the financial statements. Now, this is the classification that I as an auditor make, while analyzing or performing my audit in accordance with standards on auditing. Management's responsibility relating to both the law is that they need to ensure that law and regulation are complied with, and specifically the amounts and disclosure in the financial statements are as per the relevant act, because non-compliance might result in fines, litigation, or other grave consequences. So management's responsibility is to make sure that they are compliant with the law. So what is compliance? What is non-compliance? If we were to discuss in a little more details, is so SA250 defines a non-compliance as any act of omission or commission. So non-compliance could be an intentional non-compliance or it could be an unintentional, right? So say for example, there was an error in computation of Income Tax Act. It's a in computation of income tax. So it's error is an unintentional non-compliance. Whereas if I'm manipulating my tax liability, it would be an intentional non-compliance, right? So this is what the non-compliance is meant. What it excludes is any personal misconduct, which is not related to the business activity. So say for example, a personal litigation against the director relating his household matters is not a non-compliance that I am concerned with, right? So I'm concerned with only the business and the company related non-compliances. Having defined the non-compliances, what is the responsibility of the management? Obviously, they need to ensure that their organization is compliant with all the different laws and regulation that are applicable to them. So for this, they might need to inculcate a culture of compliance within the organization. They may lay down various internal controls that are relevant. They might implement various procedures. So like for example, conducting a monthly review of legal requirements, having a compliance calendar, having a code of conduct, providing trainings to the employees so that the employees are aware about the requirement of the law so that the non-compliances get reduced. Engaging legal advisors on a timely basis so as to, so say for example, there is an amendment to the Companies Act 2013, providing a training to the employees, seeking legal help, wherever applicable, maintaining a register or a list of what all acts are applicable to the entity. So these could be the various steps that can be followed by the management to ensure that they are, compliant with the law. As an auditor, if these things are present, I may say that, okay, the risk of non-compliance is pretty less. What is my responsibility as an auditor? As I said, I need to understand the law and regulation into two categories. First is those law and regulation that have a direct impact on the financial statements. So for these law and regulation, the SA250 requires me to obtain sufficient and appropriate audit evidence about whether the entity is complying with these law or not. So it's a direct procedure that I have to perform. Whereas in the second case, which do not have a direct impact on the financial statements, like a safety law or a pollution control law, I need to undertake specific, so it's like a negative testing kind of a thing where I need to undertake specified audit procedures so as to identify if there are any non-compliances with the law and regulation. And if my procedures indicate that there might be a possible non-compliance, I need to then take it forward and perform suitable audit procedures. So while conducting an audit in accordance with the standards on auditing, the approach that I need to follow, or a stepwise approach that I need to follow, is that first I need to have an understanding of what are the law and regulation that are applicable to the entity, right? Then obtain sufficient and appropriate, so out of the law, then classify them into two categories, whether they have a direct impact on financial statements or not. Seek necessary evidence for laws that have a direct implication on the financial statements. For other law, perform a negative testing kind of a thing, so as to see if there are any indications of non-compliances. If you identify a non-compliance, you perform further audit procedure. Otherwise, we say that we have obtained the relevant evidence that we need to obtain. If our procedures identify a non-compliance, then obviously we are not the authority to conclude what is a non-compliance or what should be the penalty. But if we identify any non-compliance, what we need to do is we need to understand what was the act of non-compliance, whether it was intentional, unintentional. If the non-compliance is only a suspected one, I need to discuss it with the management and also with those charged with the governance. If they do not provide sufficient information about the non-compliance or what could be the consequences, I might need to take legal advice on that matter. And if still after that I cannot get sufficient information, I might have to modify my opinion to give either a qualified opinion or a disclaimer of opinion. So these are the audit procedures that I need to follow for identified non-compliances. So I hope this is clear. We go on to the next slide. Many a times there might be certain acts that might require me as an auditor to report on identified or suspected fraud. So any non-compliances should definitely be highlighted to the audit committee. If there is no audit committee, to the management. Then at times I need to decide whether that non-compliance needs to go in the auditor's report. So it might be as an emphasis on matter paragraph or a key audit matter paragraph, depending upon the case. And in certain cases, so say for example, non-compliance with the Companies Act, which is intentional and results in a fraud. So there 143.12 might get retracted and I might have to do a reporting to the enforcement authorities. So these are the three levels of reporting, as you can see on the screen, that I might need to adhere to, depending upon the facts and circumstances of each case. Now, let us talk about in detail as to what are the non-compliances that I need to report in my audit report. So if there is a non-compliance and it is, so say for example, entity has violated a provision relating to patent and has wrongfully used a patent, and there is a charge against the company, or for example, the entity has violated the pollution control laws and there is a penal provision against the company, then adequate provision needs to be made in the financial statements. However, if it is not adequately reflected in the financial statements, if a provision is not made, it might amount to a misstatement and I might have to issue a qualified or an adverse opinion. If there is a suspected non-compliances, second situation, if there is a suspected non-compliances, but I'm not able to obtain audit evidence so as to get a full and fair details about that non-compliance, it might cause a scope limitation and I might have to issue a qualified or disclaimer of opinion depending upon whether the item is pervasive or not. If there is a limitation that is imposed by the circumstances, then I need to evaluate the impact based on the facts and circumstances of the case. Throughout the audit or wherever we conduct the audit, documentation is of a prime importance as we have been discussing. So any identified or suspected non-compliance, I should document in detail. It might constitute a significant matter that is documented and kept as a part of audit completion document also. I might also include certain copies of records or documents that I've obtained relating to the non-compliances. So for example, entity has received certain tax notices during the year. It might indicate a non-compliance. I might want to keep those documents as a part of my file and document the work as to that I have performed in relation to those notices. What is also important is a non-compliance might have been discussed by the management in their board meeting or audit committee meeting. I might want to take the minutes of those meetings, summarize them and keep them in my file as a part of audit documentation. So that's it probably as far as SA250 is concerned. We are exactly left with 15 minutes. That is the window that I had kept for the question and answer discussion. But before we start with question and answer, I'll just briefly summarize the requirements of SA250, which is, it says that the responsibility of complying with law rests with the management. I as an auditor need to divide the law into two categories, which is having a direct impact on the financial statements and others. For the law having direct impact on the financial statements, I need to obtain sufficient and appropriate audit evidence so as to conclude whether a misstatement has occurred or not. And for the other law, I need to identify if there is any suspected non-compliances. If there is a identified or a suspected non-compliance, I need to understand and communicate them to those charged with governance, might be through audit report, and to the regulators if applicable. So yeah, these were the broad requirements of SA250. We can now take up question and answers if any.
We have one question.
Yeah.
Some illustration on documentation of fraud. Auditor not found the fraud and later on it was detected by the authority, by other authority. What kind of documents can save auditor?
So yeah, very relevant question and very important question for that matter. So I'll just tell you that there have been legal cases whereby the auditor, it has been concluded that if the auditor was independent in spirit, in word, if he exercised and conducted the audit thoroughly in accordance with the standards on auditing, and he was not grossly negligent, then obviously he cannot be called up to say that you did not detect the fraud. So specifically, there is a lot of documentation that you need to have in file if you need to get out of this situation whereby fraud was detected after you completed the audit. But just to give you a few important documents, it will be first your independence declaration from the teams as to whether you as an auditor was independent of the management, right? And if there were any conflicts, how did you address it? So independence documentation is very important. Another important documentation is the entire flow of the audit process from planning till execution to reporting, which highlights the fact that you consciously assess the risk, right? Analyze the fraud risk factors, were professionally skeptical. So all your planning documents linked with the execution, filled audit programs. Third is documentation relating to the engagement team. So minutes of engagement team meeting at the briefing stage as well as the debriefing stage. Minutes of meeting with the board audit committee. So I think these are the documents that might really be helpful in this situation.
Thank you. Do we have another questions? Does anyone wish to ask any more questions? I think you have so nicely explained that there are hardly participants left with the questions. With this, I, Ashrita Shah, on behalf of WIRC, extend a very hearty vote of thanks. Thank you, sir, for sparing your valuable time and guiding our participants so beautifully that they are hardly left with any questions. We had a beautiful presentation by you, which was exhaustive in itself. Thank you very much for everything.
Thanks a lot for giving this opportunity to speak on standards on auditing, which is a very critical area, and we really appreciate this initiative on these sessions.
It was our pleasure. Thank you so much.
And thanks to all the participants as well for giving a good silent hearing. Thank you.
Mr. Aji, can we end the session?
Yes, madam. Thank you.
Thank you.
Thanks again, everyone. Thanks.